Hey, good afternoon. It's Jeff. It's Wednesday here, May 17th. Just going to go over what's happening on the charts and kind of what may be coming in the future. So, obviously, today was not good across the board as far as all the grains are concerned. Outside of cotton, everything was just had a really bad day. We're starting off with the July soybean contract. What I really want to point out today is this trend channel that kind of started, back in the high in February. We bounced down in March, kind of had a bounce up in here to the $15 mark in April. And so that really set this channel of what might be going on. And today's the first day we closed outside of it. Yes, when we broke all this resistance yesterday, it accelerated through it. Now we're accelerating out of the bottom of this channel. So really would expect some more selling through this, especially putting, some pressure on these lows over here last July in 22. That's kind of expectations there. We do have, if we break those, your next target's probably down here in the 1240 range, and below that it gets pretty ugly. So obviously these things probably won't go in a straight line. So if you still holding beans, probably not going to argue about selling them. Or if you want to see if it'll get a bounce, that's up to you. But we could sure help you through that if you need some help on that. Obviously, some of our oscillators are starting to get into the oversold range, so we're a little hesitant about trying to chase these markets in all these, and we'll kind of show those as we go through them. What's that mean on the November chart? So November chart was the first day we closed below the July 22 again. If you want to put the trend channel on from the highs over here, we broke through this one a long time ago, and that's when we talked about thought we'd get a bounce up here. That's kind of when we left hedges. It didn't bounce enough, and then we put them back on. So we didn't really do that so much in beans. We tried to enhance it a little bit, but kind of lowered our put, but it just we still made money. We're still hedged, so we're good there. As far as counts, is this going to concern? Honestly, we're 1140, maybe where we get some traction. Stochastics are really getting pretty oversold in this. That's why we kind of hate to try to chase this market. 4 still has a way to go. The max still has a way to go. So not saying this is the end, but it's hard to chase these when these things start moving. So if you don't have any beans sold for 23, you might start looking at it, or really look at it and decide where you have to really get hedged. The problem I'm seeing is we're back into this range, clear back in in 21, this 11.50 to $12 range. We're back into it. 11.50 gives way, we're going to come test this 1140 range and could even possibly run down into the below 11. How fast or where we get a bump or a bounce, who knows at this moment. Obviously, we'll probably get a weather scare at some point, whether that's the Brazil weather that guys talk about, or weather here in the States. But that I think what we're doing right now is pricing in the large planted acres that we think we've got done. Great planting weather. Got rains coming through, helping it get up. So that's kind of seems like what we're doing right now. Jumping to the corn market. Something I want to point out today, off the the high that we had back in 22 of October. Not the ultimate high, but when we got the bounce off the low, this kind of set a trend channel here. And all I'm really wanting to show you is how this is starting to accelerate down. So this trend channel was a little slow. Now we've set a new one off this high from this low and this bounce. And today we broke through this channel as well. So just so you can see that a little better, I'm going to remove that first one. So when we do this, you expect some acceleration. The magnets off of this high, we blew through the 1.618, and so honestly, we think we should go test, this 2.236 number, which is down around the 540, 539 level. We've already broken this 575 level that was the low back in the July of 22. So not great chart action for a bull. That's definitely the case. Again, this is the MAC. It's not quite as oversold. The histogram definitely isn't. Let's see. Force has still got some ways to go. It's really showing some force moving down today. The RSI still has some room to go. Obviously, this is rolled back over and crossed over on stochastics, so that's not a great signal either. So we would expect some more down movement in the July corn contract. What's that mean for D's? So here's the longest trend channel. This was the high back in April of 22. And as you can see, we're still kind of in that longest trend channel, which is still down. If you want to go to a shorter one, we've broken through it. We've given up the low back in July of 22 a long time ago. That's why we won. We thought we'd get more of a bump in here. We didn't get it. That's why we reset hedges. We're right on for the Elliott wave, guys. As far as this DeMark Elliott wave, the wave forward going up, which is what you really don't want to penetrate as a bull, is right where we closed today. So that was clear back in December of 21. It's right on the same number as we are today. You would really want to see that bounce tomorrow and not break it. Otherwise, it's really a poor concern as far as the Elliott wave factors. As far as the DeMarks are concerned, some other guys, are way more bearish on that. So expecting that to break. If it does, 486 maybe the next number target, and could possibly, run clear down to 427. Not saying it's going to do that straight down. As you know, these markets don't go in straight lines most of the time. They get bounces. If you need more December, we hate to chase it. These are sometimes getting in a little bit oversold conditions, so we hate to just start chasing it and put more on. If you don't have any and you want to get some sold, we are not going to blame you in that respect. You guys know your numbers. It is your farm. Do what you need to do to protect your profitability if you need to. Definitely would, if you do sell something and you want to enhance that later, start making a plan of what you think you need to do, especially if we do happen to reverse on a weather scare. Make sure you know what that plan is and how to do that, and we'd sure be happy to help you, because obviously we do make adjustments on these things, and we'll let you know what we do and when we do it. So with that, we'll go ahead and go into the Kansas City wheat market. Let me get the right chart. Here's the Kansas City wheat market. Tim talked about this box. Maybe this is the box of resistance. Obviously, we tested that today and immediately reversed from it. I don't know if it's because of that or just the overall market complex of corn and beans are breaking. The Black Sea grain deal got extended a couple months. So obviously that's probably going to put some pressure on the wheat and corn markets. So as far as our system is concerned, our line is moving up. The cloud's down here at 829, the bottom of it, and it's starting to move up. It's for this whole market to break, it's going to go through our line, and that's where we're really going to make decisions on whether we need to put more hedges on, sell more wheat. Now, if you don't have any wheat sold, I would not argue with you about getting some on at this point. If you know you got a crop and you can sell a little bit with the market action and the other markets and the action off this, we're 30 cents off the high here. So that's pretty telling that maybe we're getting a short-term top, or it could be the end. We don't know. We've got other indicators saying, maybe we got a short-term top in here. But as far as our main system, I would definitely really respect the bottom of the cloud and our line, which is all right here at 8:30 this point. Our line's going to keep moving up as well as this cloud. So any break of those, and we definitely need to sell pretty much everything else that we can at that point. With that, I do want to mention we did email everybody about setting up an Anderson wheat MPP for 2024. We're going to try and get that rolling pretty quick. So if you're interested in getting into that, that is through the Andersons. We manage it. It's our recommendations. It is against the cash grain contract, so it is in delivery at the end point. So keep that in mind, and we'll do that in 5,000 bushel increments, so you can put in as much as you want. So please don't hesitate to reach out if you want to get in on that. We're probably going to be soon talking about 2024 corn as well, doing that same thing. And I don't know, we'll discuss about 2025, but that's putting it pretty far out there yet. So if you have any questions, please don't hesitate to reach out. Otherwise, that's what I have for you today. If you have any questions, as always, give us a call, email us. We'll try to answer as much as we can. As always, there's trading in futures and options carries significant risk. So if you're using those, make sure you're trading in light of your financial conditions, and don't get yourself in trouble there. So have a great day. Hopefully we can see more green than red, but as of today, it doesn't look like that's the case. So have a good evening.